Well, you're absolutely right about property playing this role. And the property problems, as we know, started before COVID. COVID certainly wasn't good for property, but property had its own serious problems before that with debts and accumulated at private developers. Um, Property to me is going to have to be a lagging indicator in Chinese recovery. You need firms and consumers both to be more confident in their finances, especially on the household side. Then perhaps they turn to property. We saw improvement in cars in May. Obviously, a car is an important purchase. It's not a property purchase. That's going to take months more. So I think property is going to lag. And this is in the good case. If China does well in May, as we say, as it seems to have, does well in June again, and can maintain this gradual recovery, then we get to property. As a result, even in these good months, what we think are improving months in May and June, growth is not going to return to what some people thought it would be, more like 2017 or 2018, because property will continue to weigh.
Tell me how you see the COVID situation playing out economically this time.
Well, this is really fascinating because we are seeing firms reporting clearly that they have more COVID cases. Each firm has more COVID cases and more firms are reporting COVID cases. So, last year at this time, this happened and the government absolutely panicked. And now they don't seem to be even talking about it. So as long as COVID cases, the severity of the strain of COVID that China is dealing with is mild, it shouldn't be a problem for economic performance. If it's not mild, or if the government reverts to its form in 2020, 2021, 2022, then all bets are off. So that's clearly a risk. To now, the higher COVID reports have not interfered with firm earnings, but you can't count on that because the Chinese government has shown that it's very sensitive on the health front.
All right, so net, tell me what your GDP predictions are for the next couple of quarters.
Well, Q2 is going to look falsely positive because Q2 last year was so bad. So, I think we're looking at a Q2 performance of over 8% for GDP growth. We're not there yet. It's only the end of May, so that certainly could be wrong. But even if we get that 8%, it's going to be misleading because that's basically a function of a weak base. Then I think we go back towards 5% in the third quarter. Which is where the Chinese economy is going to settle this year at that 5% growth, with the bump coming from an artificially fast Q2.